Hello, everyone out there. This is Wayne Smith for 4D Finance News. And this isn't going to be a dividend section, but in any event, you saw our disclaimer. This is not financial advice. I'm not a financial advisor. This is my opinion. It's based on some research, but still, I'm not a financial advisor. One thing I do know, though, Wall Street's strategy has backfired, and it was because of the OPEC nations squeezing oil supply. They're going to lower the supply, which increases demand. And of course, as demand increases, prices increase. So how did Wall Street respond? Well, first off, let's look at their strategy. Their strategy is always to short oil as a source of revenue. That's their income. Shorting oil stock, oil companies, whether it's upstream, midstream, or if they're the refinery itself. And when you actually look at it, it may have been very successful in the past, but I think the OPEC nations have caught on to it. For weeks, the Saudis had warned speculators, in the industry, in the stock market, and what have you, about the danger of shorting oil futures for weeks. Some people don't learn. And so Saudi Arabia and its allies have employed the very popular tactic, the element of surprise, and they're going to accelerate and amplify a short covering rally that's already been underway for around 10, 15 days or so at the time of this particular video. There was a bearish sentiment. We know that, especially in the U.S., especially when you look at a certain part of the U.S., the West Texas intermediary. That's a futures contract, for those that don't know. And you can look it up. This is a really good time to start to understand oil and other different commodities, the futures market. Look up some of these terms. They're very interesting. Well, that West Texas intermediate contract, funds were amassing in short positions, amounting to 127 million barrels on March 21st. That was up from 56 million on March 7th. The Saudis, they've been around a long time. They are really good at strategy. They understood the best time to take charge is not when a market is trending strongly, but when it's recently turned around, and then the trend can be turbocharged, so to speak. So these cuts that were announced by the OPEC plus nations are likely to accelerate. Actually, if you're long in these positions, it's going to make you some money. And so that short covering rally, they're going to have some serious problems covering. Serious problems. And so it looks like this was done on purpose. We'll see in the next few days or so how that works out. I'm not telling you to go long. I'll tell you what I am going to do, but I'm not going to tell you to go long because I'm not a financial advisor. But I'm already in the play, and I love oil anyway. So I've been in the play in many different ways for the past 3 years or so. So I wish you well with your investments. And this is just a bit of news about Wall Street and how their strategy backfired and how the OPEC nations are going to squeeze this thing, and maybe we can make some profits. Okay. All right. I want everybody to take care. This is 4D Finance. I'm sorry, 4D Finance News, and Wayne Smith, and I'm out.